Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Kingboard Holdings Limited annual report. Kingboard Holdings Limited is a diversified investment holding company that operates through 6 segments. The company's business portfolio includes the manufacture and sale of laminates, printed circuit boards, PCBs, magnetic products, and chemicals. The laminate segment produces and distributes various types of laminates, fiberglass fabrics, and yarns. The PCB segment manufactures single-sided, double-sided, and multi-layer PCBs for use in electronic devices. In addition to these core businesses, Kingboard Holdings Limited also provides a range of chemical products, including methanol, glacial acetic acid, and PVC. The company's properties segment is involved in property development and rental activities, while the investments segment invests in debt and equity instruments. The other segment includes the manufacture and sale of magnetic products as well as hotel operations. With its diverse business portfolio, Kingboard Holdings Limited has established itself as a significant player in various industries across Asia, Europe, and the United States. Kingboard Holdings Limited maintains a market capitalization of $42 billion, broadly in line with the industry peer group. Kingboard Holdings Limited trades at a higher price-to-earnings ratio of 15 times, and a higher price-to-book ratio of 0.67 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it appears. We will need to evaluate if the business earnings is sustainable, and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap? The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 3.65%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company can be attributed to various factors. On the positive side, the laminates segment experienced significant growth due to increasing demand driven by AI and electric/smart vehicle technologies. The PCB segment also sustained growth in the electronics market, particularly in computing infrastructure and AI technologies. Additionally, the chemicals segment saw an increase in revenue due to robust sales of caustic soda. On the other hand, the properties segment witnessed a decline in revenue due to fewer residential property deliveries. The PCB segment also experienced a decrease in revenue due to intersegment sales. Furthermore, rental income declined by 9% due to general market rental downturn and rent-free periods granted for certain leases. It is worth noting that despite these fluctuations, the company's operational efficiency improved significantly, with EBITDA growth of plus 63%. This indicates that the company has made efforts to optimize its operations, leading to increased profitability. The underlying net profit growth of plus 207% further supports this notion, highlighting the company's strong financial performance. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the provided information, the company achieved an operating cash flow of $705,769 in 2024. This positive operating cash flow is a crucial indicator of a company's financial health and stability. It suggests that the company is generating sufficient cash to cover its operational expenses, invest in growth initiatives, and return value to shareholders. Overall, this development is a positive sign for the company's future prospects. The company's debt level has undergone significant changes in the recent period. Non-current liabilities have increased by a substantial amount of $120,000, indicating a rise in long-term debts. On the other hand, current liabilities have seen an even more pronounced increase of $98,098,000, suggesting that short-term debts have also risen. In contrast to the rising debt levels, interest expenses have decreased significantly. The company has managed to reduce its interest expenses by 27.2% from $149,935 to $142,101. This reduction in interest expenses is a positive sign for the company's financial health and may indicate improved management of its debt obligations. The performance of various segments and regions within the company has been analyzed, revealing both positive and negative trends. In terms of segments, laminate stood out as a strong performer, generating $20,713,166 in revenue. In contrast, PCBs and chemicals underperformed compared to laminates, with revenues of $13,314,350 and $13,506,092 respectively. However, properties showed an unexpected improvement, exceeding initial expectations. Regionally, the PRC demonstrated exceptional performance, accounting for 89.4% and 86.5% of total revenue in 2025 and 2024 respectively. Other Asian countries also saw a significant increase in revenue, from 5.9% to 7.6%. Europe's performance remained consistent between the 2 years, while America lagged behind other regions, with a revenue share of only 2.1% in 2025. Management is expressing optimism about the company's future prospects. A significant indicator of this confidence is the successful issuance of an $1 billion loan, which demonstrates market faith in the company's stability and financial health. This achievement underscores the company's ability to secure substantial funding, a testament to its solid foundation. Management remains committed to prudent financial management, ensuring that the company continues on a stable path forward. The company's financial performance is reflected in its dividend payments. In 2025, the company paid out a significant amount of $713,561,000 as dividends to its shareholders. This indicates that the company has generated substantial profits and is distributing them among its investors. Furthermore, the dividend per share for the year F 2025 was $120, providing a clear picture of how the company's earnings are being distributed among its shareholders. The payment of dividends suggests that the company is committed to rewarding its investors and sharing its success with them. That concludes the financial summary for Kingboard Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.